Hey, hello friends, I'm Chris, Wave Cafe. Welcome to today's video. Let's take a look at the markets. I got a couple of interesting things to show you. I'm going to start right off the bat with just kind of showing you how the market was today. And although we came back in a couple of indices, we were a bit coming back towards the end of the day, but everything was pretty much in a massive sell-off, and you could see the first part of my slide in here. This was taken kind of earlier in the morning when the tech was the one that was the strongest of kind of all the sectors in the S&P 500. Everything else was kind of a disaster. The advanced declines were, for every three stocks that were declining, there were only one advancing. So it was 3.5 to 1 in the NYSE, about 2.5 to 1 in the Nasdaq. So and then we kind of accelerated throughout the day, but in the last hour we started to come back a little bit. And here you can see we had pretty much where you see this red is pretty much just pounding, selling all day long. Every time, they were trying to get a little bit of buying, they were met with sellers and continued to sell off. Now, I didn't measure this in the end of the day, but this was pretty much, for a good part of the day in here. So this was the picture, and you could see the reason I think the tech came back towards the end of the day is because it was kind of the outperformer throughout the day. Even though this number came down, when you look at the rest of the numbers, this number was somewhat the strongest of them all kind of throughout the day. So there was a little bit of an underlying strength. Now, what this does, this basically measures, it doesn't measure the gaps, it just measures what happens intraday from the moment you open to the moment you close. What's the strength in those indices? So it's something that I like to watch intraday to see where where the strength is, and if I should kind of switch my take, if I do any intraday trading, to kind of see what I'm looking at. So this is kind of the picture that we've had. Yesterday's move kind of failed, and today we got pounded with some selling. But if you look at the S&P in here, you could see that this massive level continues to hold. A couple of days ago, we tried to break, we reversed, and we're just not able to clear and stay solidly below this level. So this is still, it's a weak market, it's a broken market, but we still have polls, that are not letting anybody be happy for too long. So just this is when the Nvidia earnings fail, and that led to a little bit of a sell-off. But again, I mean, look at this massive level. Now this looks like a big head and shoulders, but I'm going to show you something in here that I think you're going to like, if you're bullish. So let's see how we behave in here. The move today towards the end again show there's still people that don't want to let this to break down. If we look, at the S&P here on the daily, same thing. We're below that 50-day moving average, but I mean, look at the number of the wicks that we're getting below, that level in there. Look, for the past 4 days, there's multiple buying continuing to come in, and every time we sell off, if you look at the at the volume down here, every time we sell off, there's higher volume. So what this does is continues to to show there is more distribution than accumulation. The fact that they come in towards the end of the day, it's interesting. It shows there is still either shorts covering or just interest in not letting it go down. But the fact that we're selling off in higher volume, that's still a positive for the bears. Now let's take a look at this, because this is interesting. So the wave count that we're watching is for the development of a wave 2. Now, if this fails, and I'm going to show you in the next slide, why it could fail. If this fails, then I would have to label this move in here, right, as a wave 1 of a larger wave 5, or maybe a very short wave 2 already. I don't know. But the fact that we're holding here at about 61.8, if you see the level, right, this is exactly the level that we're holding based on this decline, based on this kind of the latest rally to the high. When you hold a 61.8, and you push back, usually it's a wave too low, and you can start to move higher towards the next level. I mean, if you move to the upside, the target would be towards 7,189 and then 7,383. By the way the market is acting, you wouldn't say that that's possible, but the fact that we're holding these levels, that's just kind of just kind of keeps me grounded. I don't want to sound too bearish, I don't want to sound too bullish, but I want to look at both sides of the tape and see, if this happens, what would be the next logical move. And obviously the next level will be 69.87, that we got to overtake that to move over towards 71.89 in the S&P 500. So here's what I wanted to show you. If this is the end of the move, and forget about that being a fifth wave there, the decline in here, we can label it in a complex correction, and actually in a larger combination where we come down in an A, B, C for a wave W, then we go up in an X wave to the prior B wave high, then we're selling off in another wave Y, then we do another A, B, C in here for a wave X, and then we sell off in another A, B, C for a wave Z. The only I don't dislike this. The only problem that I have is with this wave Y, because it looks kind of an impulsive move. If I look at it again, you could actually do this in three waves and just go in an A, B, and then a wave C in here, because inside the structure you can have a 1, 2, 3, 4, and a small fifth wave. I guess that's possible. So that's the only way that kind of tricks me out. But the fact that we went back to the prior B wave could tell me that this was actually an X wave, and then the next rally higher again stopped in the prior level, so another X. So if this is correct, this would be, and look at the 61.8, and look where we are on this retracement. Bottom of the channel. Now the move higher from this low, it's just in three waves. Again, that's another kind of a negative. So it's very tricky up here. It's very tricky up here. I'm trying to kind of look at it with both eyes again, through the bearish perspective, to the bullish perspective, what I could be wrong. In the meantime, I'm trying to protect the long side, and I'm going to talk in the last slide about, I guess, the importance of shorting and the importance of hedging. But I don't want to be, I don't want to be too bearish. I don't want to be too bullish. Just kind of trying to extract from some of these moves as much as I can, without having a lot of conviction. Now, this is, I think this is the Dow Jones. Yeah, my face is in the way, so I don't see the label. This is the Dow Jones, and you can see basically how much weaker this is. And once we had this kind of fake move to the new highs there, and then we started to kind of fall apart, and this looks way more impulsive. The volume, it's pretty strong, so this kind of, it's worrisome. And you can see in here, we're coming into the RSI, we're starting to break below the 40. If this has to hold like right up here, because otherwise we can start to deteriorate. You can see in previous instances where we've broken that 40 RSI, quickly we reversed and we're starting to move higher. But that was different. That was when you were actually still in an uptrending market with a 50 RSI, with a 50 day moving average that was still, uptrending. And this is, we've broken below it severely. So the trend kind of changed, it shifted. So we got to pay attention to what's going on. Why is the tech rally for a little bit? Maybe it's just the pullback in the, in that software sector that was so damaged. But we're getting a lot of selling still underneath the surface. The Nasdaq in here, look, it pulled back yesterday. It continues to sell off on large volume, but it's not breaking. So today was another day that they were able to kind of turn again. Below that 50 day, which is flat, again, I'm going to continue to stay short. But the moment we go and we close above the 50-day moving average, we could start getting short squeezes. So I'm going to pay attention to that. And if that's the case, I'm probably going to try to pound the long side. So that's what I'm thinking on, on the Nasdaq, and it recoup, quite a bit of the losses today. Now, Bitcoin. Yesterday we talked about the nice rally that we had, and the fact that we approached resistance. Now, I wanted to show you something, and if you're bullish on Bitcoin, and maybe you never take the short side, or you're not even interested in that, that's fine. But that doesn't make it less likely that stuff like this happens, right? So we have to be aware of the market both ways. This is the level where sellers are showing up, and they're supposed to show up. They're supposed to show up because you have overhead resistance, you have supply, you got the 70K level, you got a declining 50-day moving average, you got an RSI that's pushing up into the 60 zone, coming from an oversold condition here into the 20s. And when this happens, when these conditions are met, where you're going up to that previous resistance, previous support now becomes resistance, when you have a declining moving average, when you have an RSI against that resistance 60, those are all prime conditions for anybody that wants to sell to start selling. Some people take profits, some people want to actually short the market, some people hedge, whatever. But we got to be aware of those things. We can't just be blindly saying, man, it's a low and it's going to continue to rip. Now, the count is still favors further upside. If this was a wave 1 and a 2, you got your kind of grinding up in a 1, 2, 1, 2, 1, 2, 3. Hopefully we can get a 4 in here again and just push higher and continue to squeeze in a larger third wave, 4 and 5. So I'm putting this label up here because this is the one that I'm sort of favoring in a way, as obviously I'm bullish on Bitcoin, and maybe I'm a little bit biased, but as I said yesterday, might as well I could have put some kind of a corrective pattern here and still maybe there is like an AB up in C or a WXY type of a move, and you're still rolling over. So I don't want to dismiss that, and I don't want to put a bunch of labels and create a bunch of alternate counts. I just want you to be aware, that this in here, it doesn't mean anything. It's just a thought process following along the price until we're actually getting more and more confidence that we actually have a low. And I said this in so many videos already, ever since we established this low, that it's going to take a long time for Bitcoin to find a low, to get bulls back, to gain confidence. We're still not there. We're just a little bit of buying, but we can't trust this a whole lot. So I'm going to keep the labels. That's fine. If they start to work out, I'm not going to come in here and boost and say, oh, I was right about the count, because, I don't really care about this. I just, want to show you the progressions. So, all right, let's see how it goes, but I don't want the Bitcoin to kind of start to fall below 70K. If it starts to get back below 70K, I think we got issues. We got issues. And then if you're looking at this as a fourth wave and this is a wave 1, then you definitely don't want to get below this high. Which is about 69K. So if you get below those levels, then all of this labeling starts to be problematic. Okay, now I'm just going to quickly close by talking just a couple of minutes about this. Regarding trading the market from both sides, maybe a lot of you do. Maybe some of you don't, just like to be on the bullish side and never think about shorting. Maybe some of you want to learn about how can I incorporate shorting into my trading, and I could probably make a whole video about this and show you a bunch of charts and a bunch of strategies and kind of how to go about doing this and short more or hedge more, or use options and other strategies to to go on the short side. But the key thing that I wanted you to kind of think about is the fact that shorting, what it does, it keeps you grounded into being, real about the market, knowing that the market has two sides, has a bullish side and a bearish side. Now, the bullish side happens more than the bearish side because, that's the nature of the market as companies grow and make all kind of products. And the way the market is set up with 401ks and people continuing pouring money from their retirements, and it's just meant over time, right, to grow if the economy continues to grow and we're in good times and all of that. So shorting, it's hard, but it does keep you grounded because the moment you're short, you're not blinded by the bullishness, and you're just basically looking at the other side of the coin. It can also boost returns. So if you're a long portfolio, which most of the people are, via the standard indices, the moment that you're trying to short, and with that we can go also with hedging the longs. The long side has a tendency of taking care of itself, right? You don't need to worry much about it because the market over time goes higher. But when you see situations like that, you're supposed to have a corrective move and you don't want to get out of your longs because you don't want to pay taxes or you don't want to touch the positions, because after that it's going to be much harder to put them back on, and you don't want to mess with those core holdings that you have. Maybe they're from much lower. Then by putting hedges on, especially when you see that the wave count shows you or that the market deteriorates, or you think that you're maybe in a in a place where the market will go into a correction, then deploying these strategies actually boosts the returns, because you can lose on the long side, but you can mitigate those losses by positioning yourself with these strategies where you're short and where you're trying to hedge the positions. And once you eliminate those, then your long side starts from much better levels. And let's say instead of losing, I don't know, I'm just saying like $5,000, you might lose only 1,000 or only 2,000, or maybe if you're more aggressive when you're hedging, you can even balance it out and be neutral. So this is kind of how you can help damage some of those losses. And shorting and hedging kind of helps with that. So I would say, don't be afraid of that. If you never thought about it, or if you think it's you never want to try it, don't be afraid of that, because the patterns are the same as they are to the long side, especially when you look at the wave counts or when you see different channels breaking of key moving averages. You got a lot of options there in terms of the weak stocks. You got a lot of options in just even on using put spreads as options. The markets are so liquid now that you can find all kind of levels and deltas where you can protect yourself. Now sure, this requires a bit of studying and a bit of learning, but these things kind of help overall. And then the last point is you also get a feel for the long side, in a way that if you're hedging or you're trying to short and you see that it doesn't work and the market, because if you have a short position, you're going to pay attention to the market a bit more, and you're going to say, man, it doesn't work. They keep coming back, they keep buying it, and I'm short. What's going on in here? I'm losing money on my shorts, I'm losing money on my hedges. So that makes you actually be more convinced about the bullish side, and you can increase those positions if you need to, or juice up those movements by maybe buying additional shares into stocks you like, or buying bull spreads or what have you. So I think it's very important. Now, I'm saying all of this, but I tell you, like when it comes to Bitcoin and stuff, I don't want to do that, and I don't like to do that. So, maybe I'm a bit hypocritical here, but I'm talking mainly about the stock market and the equities part of it. But it could apply to cryptos as well if you like it and you're familiar and you have the problem in crypto is that I didn't look that much into it, but you don't have that many, I guess, to put options on and be able to do that. Although now, with all the ETFs, there could be those opportunities, and maybe there are brokers that also offer options on crypto in a different way. And whatever when I used to do it, when I was looking into it, I couldn't find much, and I don't know even how the spreads are, how the liquidity is. So I don't know if I'm ever going to bother doing it, but we'll see. Anyhow, that's just these are my thoughts for today. If you have any suggestions, any ideas, any comments, again, just you can leave them below. As always, thanks for watching, guys, and let me have a great weekend, and I'll talk to you next week. Bye bye.